Imagine the government walks into your bank account and says, you can't touch 10% of your deposited money, ever. It just sits there, locked. That's exactly what happens to banks every single day. Welcome to reserve requirements, the tool bankers actually fear. Here's how it works. When you deposit money in a bank, they don't keep all of it sitting in a vault. They lend most of it out to make a profit. But central banks force them to lock up a percentage, let's say 10%, and never touch it. That locked money, it's called the reserve requirement. It's insurance against a bank run, but it's also a weapon. When inflation gets out of control, the central bank doesn't ask nicely. They raise the reserve requirement. Suddenly, banks have to lock up 15%, maybe 20% of every deposit. That means less money available to lend to you for houses, cars, or businesses. Less lending equals less spending. Less spending cools down prices in the economy. So the inflation fire starves. But here's why bankers call this the nuclear option. Unlike interest rates or bond sales, reserve requirements are instant and brutal. One announcement from the central bank and billions of dollars just freeze. Banks can't invest it, can't lend it, can't make a profit from it. It's like forcing a restaurant to throw away half its ingredients before opening. Painful, effective, but rarely used. Different countries play this game differently. China has used reserve requirements aggressively, sometimes as high as 20%. The US actually dropped theirs to zero during COVID to pump money into the economy. Europe keeps it low and steady. It's a tool that sits in the vault, waiting, and when it comes out, everyone feels it. So now you know the central bank's three weapons. Interest rates to set the price, open market operations to control the quantity, and reserve requirements to lock it all down. But what happens when all three fail? Next video, quantitative easing that as when central banks break their own rules. Thank you for watching. Hit subscribe so you never miss the next breakdown.